Thanks for clicking. The Toronto Regional Real Estate Board has released its data for the month of June, showing a real estate market that is slowing, with prices falling throughout the month. Indeed, following the Bank of Canada's announcement that it would be raising rates at the beginning of June, predictions started trickling in that we would see a slowdown in the GTA real estate market, with some even noting that the market was incredibly fragile.
We're all fine, everyone's fine.
And June's data appears to bear that out, with prices reversing considerably, even with the TRREB saying that a persistent lack of inventory led to tighter market conditions. However, it's not clear, as of yet, that an apparent tighter supply will stop the reversal in prices. So what I want to do today is go over Toronto's real estate market for the month of June, take a look at its apparent lack of listings, if that's even the case, and then discuss what to look for next. Speaking of next, as mentioned, the Bank of Canada is set to make its interest rate announcement next week, and we'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this real estate data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home, which represents the most popular set of features. Toronto's benchmark price did increase, though marginally, in June. The benchmark in May was sitting at $1,164,400, and that jumped up a little less than $7,000 to $1,171,300. So that's a $6,900 increase, which, while still an increase, is much less than the double-digit increases that we've been seeing month over month for the past few months. And although we did see a marginal increase in the benchmark price, the average price was down in June. The average price in May was sitting at $1,196,100, and that dropped down in June to $1,182,100. So that's close to a $14,000 decrease in the average price, and again, much different than the month-over-month increases that we've been seeing over the past few months.
It's starting. Get back in your office.
And the median price was also down in June. The median price, that's where half as many homes were sold for over that price and half as many were sold for under that price. The median price in May was sitting at $1,035,000, and that was down $25,000 to $1,010,000 in June. And again, similar to the average price, the median price, while dropping $25,000, is a big difference from the double-digit increases that we've seen over the past few months. So we have the benchmark price up, though marginally, only about $7,000, and we see the first declines in the average and median price that we've seen in the last couple of months.
Itsy bitsy little gully right now.
With that said, the months of inventory measurement did show a little bit less inventory than there was previously. The MOI measures if no more homes came to market, how long would it take for Toronto to completely run out of homes for sale. The MOI in May was sitting at 2.2, and as of June was sitting at 2.1. So if everyone just stopped selling their homes, it would take 2.1 months for Toronto to run out of inventory. With that said, although the MOI was down, the sales to list price ratio was down as well. The sales to list price ratio, the SLPR, measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $105,000, the sales to list price ratio is 105. The SLPR in Toronto in May was sitting at 105, and that was down to 104 in June. So, on average, homes are selling for 4% over asking price in June in Toronto, 1% less than they were in May. So, judging from the data in June, this is a real estate market that is showing signs of slowing down. The benchmark price is up, though marginally. The average and the median price are both down by double digits. We are seeing homes sell for less under asking than they were before, and there's a little bit less inventory on the market, a little bit less inventory if we look at the MOI measurement. With that said, these price decreases do make more sense when we look at the number of new listings coming to market. If we look at last month's data in May, we saw 15,100 new listings coming to market, with 11,900 listings available at the end of the month. Fast forward to this month, and we saw 15,865 new listings, with over 14,000 still available at the end of June. That's a little over 2,200 more properties available, more active listings than there were 1 month ago. That's a considerable increase. And while some will say that it's normal to see a major slowdown in the summer months as people are on vacation, people are spending time with their kids, they don't want to spend their time buying houses, and that this summer slowdown is normal, the major increase in active listings is not normal. Between May and June of 2022, Toronto saw active listings increase by only 600. Between May and June of 2021, the number of active listings actually decreased by 956. Between May and June of 2019, the number of active listings decreased again by 362. I'm omitting 2020 for obvious reasons. So in 2019, 2021, and 2022, we see either marginal increases in the number of listings available, or we actually see decreases. Yet, in 2023, right after the Bank of Canada ends its pause, we see a 2,200 increase in the number of active listings available. So we have a number of new listings coming to market. We have the number of active listings coming to market increasing substantially at a time when the Bank of Canada is raising interest rates, at a time when the central bank is pushing downward pressure on demand. This is a market that is showing signs of a potential slowdown. 2,200 additional listings between May and June is much more than we've seen in previous years. And if more listings continue to come to market at a time when the central bank is pushing down demand, that can and will equal price decreases. With that said, we saw this major increase in the number of listings coming to Toronto's market as a result, probably, of the Bank of Canada's decision to reverse course on its rate pause and increase interest rates last month. If the Bank of Canada raises rates again this month, we're likely to see these pressures only exasperate. Whether or not they will raise rates next week remains to be seen, but we'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.